Now it's time for a roundtable. What's the outlook of the main player of this space, digital asset, and the future of exchange trade products that are based and connected with crypto assets? Let me introduce the roundtable with Teddy Fusaro, who's president at Bitwise. Welcome, and please join me on the stage with Jean-Marie Mognetti. He's CEO of CoinShares. Please join me on the stage, and Bruno Ramos de Sousa, head of US and Europe at Hashdex. Let me start with this. We understood very clearly from all the speakers so far that we're living kind of a topical moment. Something is changing in a very rapid way. So digital assets are becoming mainstream. We heard from Paolo Ardoino, for example, that what's happening in the US with the executive order in January from the Trump administration, he's clearly pushing a lot of pressure also on the rest of the world to go there. And so I would like first to understand, what's your outlook on how the families of also investing solutions and products that you guys handle and produce, like the ETPs and so on, will react to this, and what's your outlook for 2025? Let me start with you.
Thank you. Excuse me. Hi, I'm Teddy Fusaro. I'm here from New York. I'm the president of Bitwise Asset Management. You asked about the outlook. Andre Dragosh, our head of research, gave an incredible presentation on our outlook a few minutes ago related to price, different models that we can use to think about the price of Bitcoin and how you can think about that. So I'll stay away from making price predictions since Andre already talked about that a little bit. What I will say is I spend most of my time in New York City. As Andre said earlier, we're one of the issuers of one of the largest Bitcoin ETFs in America. We're also one of the issuers of one of the largest Bitcoin ETPs in Europe. In the US, the four largest wealth management platforms that we have, so Bank of America, Merrill Lynch, Morgan Stanley, Wells Fargo, and UBS. That is where the largest wealth of the mass affluent in America is managed by the wealth managers, financial advisors in the United States. Even today, despite the fact that the Bitcoin ETF launch in America was the most successful ETF launch of all time, which is really saying something, because ETFs are perhaps the most successful financial innovation in the last 30 years. And so that's a big statement. Those four financial institutions, their financial advisors still cannot allocate to Bitcoin ETFs without their client, the individual, calling them and asking for it.
So they cannot propose.
They can't propose it. And that's pretty remarkable when you think about it. So as we think about it from an adoption perspective, what does adoption mean in terms of price activity? We hear people a lot say that it's early in crypto, it's early in Bitcoin. I think from a mechanical financial infrastructure perspective, it's still very early. So that's my thought.
Yeah, fantastic. And does CoinShares share also this kind of view? What's your sense?
Well, let's go one step further, because we're in Europe, so let's talk about Europe. And in the US, all the banks open up right away for execution. So execution only, where you call up, say, I want to buy IBIT from BlackRock. Everybody says yes. Products have been live in Europe now for 10 years. And you call some banks in Italy, our head of sales is somewhere here, and mentioned some name to me earlier, and the bank say, no, you can't trade that. The bank says no. So 10 years later, European banks are still blocking trading on execution-only basis in Europe, while in the US, within a year, everybody can trade. So if anything, what it's showing us is like the European market access is still very limited compared to what it is in the US, where, as usual, the US move extremely fast when they decide to move. And we learned from General Patton himself that when the US decide to move, they move extremely fast and extremely brutally. And Europe should take a bit of that. And as we see now, the US are moving and the world is watching. We've been talking to SFC in all over the world for 10 years, and they were all like, yeah, we're kind of waiting to see what the SEC will do. And the SEC will do something. And the SEC was doing nothing and kind of turning around the pot for many, many years. giving excuse. Now the executive order are coming their way. The crypto task force.
The head of
the
SEC has changed.
The head of SEC has changed. The head of CFTC is changing. The administration itself is very tainted by a lot of pro-crypto people. The administration is not dominated by Goldman Sachs people anymore, but by A16Z more people influence and Peter Thiel and West Coast people. So you see how technology now is coming into the business, which was not the case before. So it's a very, very different era. Crypto is there to stay despite the naysayer, and European banks need to get on the journey.
Bruno, Ramos, Sousa, how they can play this new era? What are the characteristics of the new cycle we're entering?
Yeah, I think piggybacking a little bit on what Ted and Jean-Marie said, it's been our experience too. One important thing is when the U.S. moves, this career risk that people had of investing in crypto or opening up the doors for crypto, this changes fast. It usually happens with one or two players that are more aggressive and fast, and then the competition has to follow suit. We've seen this in countries like Brazil, in which today all large banks offer crypto actively to their clients. So this should happen today, but there is a window, right? You don't want to be the last mover. And I think waiting to see it become super, super mainstream means that, or waiting it to be less volatile means that the trade between now and that more mature stage will slip away. So what we've been telling investors is to take advantage of this time. We are in the middle of the cycle. If the cycle repeats what happened the last cycles around, maybe the end is October, November, something like that. There's talks of a super cycle. We don't know. This time might be different because of the dynamics of the US and just the volumes that may come from that. So this is an important time to really take a close look and not, as sometimes you see from clients in the street, I'll wait for it to come back to 60, 70. Maybe that ship has sailed. Look at the moment now, look at what the future might bring, and act on top of that.
Well, Teddy Fusaro, talking about, we have a room full of financial advisors. So how can they address the needs or have a conversation with their clients today on this? And you were mentioning an ETF. So the ETF wrapper apparently is the most efficient in this way. How to play it in the market?
Yeah, so I think, and we at Bitwise have thought for a number of years, we started the business in 2017, the way that we've approached it and the thing that we have found to be the most important, and I was just actually chatting with Bradley Duke, our head of Europe and the founder of ETC Group, now Bitwise Europe, about this a few minutes ago. It's education. And we have found that oftentimes the education process, particularly for financial advisors related to Bitcoin and crypto, that has taken years in some cases. We've been talking to financial advisors for multiple years before they get to the point that they're comfortable with allocation. And I think as, the three of us are obviously working in crypto all day, every day. I think whenever I step outside of the crypto bubble and have conversations with folks who work in traditional finance or other industries and have to make their own wealth management decisions, the amount of education that is still required for people to understand the power of Bitcoin and crypto as a technology, as a monetary asset, as the internet of money, as this brand new thing that we all have to consider as part of our long-term wealth management strategy. There's a lot to digest. And so we've always found that educating about the asset, about the technology, not talking about product or investment sizing or how much you should invest in crypto to start is the right place. And then you also need to educate advisors and institutions in a way that they can onward educate their own clients. And so I think that's really where it all starts. And then over time, if you continue to do that, ultimately everybody that I've spoken with that actually understands the asset class.
That's a very good point, yeah.
Invests in the asset class.
Jean-Marie Mognetti, is this the education, the real challenge, for the future of digital assets?
Yeah.
How would you play it?
Yeah, education is key. now it's a little bit of the story of walk the walk and talk the talk, and people need to see facts. And the best illustration of facts is to demonstrate by numbers. Crypto was born as the promises of virus and numeris, so the force in the number and the algorithm. And effectively, if you show by the mathematics to financial advisor the power of diversification on a portfolio of just a little bit of crypto, just a little bit of Bitcoin, is improving any portfolio Sharpe ratio right away. So the best demonstration beyond education, education is fundamental, and we investing a ton of money in education across Europe to make sure that people are getting up to speed with it, is just mathematics. Just understand the basic of mathematics and how it is improving your risk management is fundamental. So, you know, we can make a long, long speech about it. The numbers speak for themselves.
Yeah, Teddy, did you want to add something on that, elaborate on that?
I think that's such a great point, particularly the point that JM made about how a tiny allocation to crypto positively impacts portfolios. You make a small allocation, you could lose all of it, but it still positively impacts your portfolio on a risk-adjusted basis during all market cycles that we've seen.
Let me make a joke about that, funny enough. We have a campaign, an advertising campaign in Germany for Q4, which was all about don't allocate too much to crypto. So it's quite antinomic for a crypto-focused asset management company to tell people to don't allocate too much to crypto. It was just because the German broker were giving us back the feedback that, wait, German investors put way too much of the portfolio into it. We need to do something to educate them further and to make them aware that too much is also risky. And the same way people tell them, you know, drink responsibly, well, invest also responsibly. And so we're trying to make that as well and not just be all in.
Well, it's a terrific point to me as a media guy. I mean, I think that, yes, people buy numbers, but people buy story, buy narrative. So also the way that the industry communicate to the people has to develop a little bit, to me, to be more interesting. And Bruno, what do you make of this?
Yeah, for sure. I mean, historically, you know, we started the company around the same time as Bitwise, end of 2017. Time and time again, we've sent letters to clients at the peak of, you know, of crypto bubbles and cycles saying, be careful. And in the panic periods, also, you know, calm down. The world's not going to be over. If your allocation is correct, which is small, and for the long term, well, small 1 to 5%, depending on the portfolio. Of course, it's not what I'm sure the three of us have, but we live off of this, so it's differently. But that calm, you know, if you're well allocated with a thoughtful exposure, diversified, which is, I think is a key factor. You know, we're very focused on the index side of things and how to build a portfolio, you know, with different assets inside of it. The investor should be fine. The mistakes come when you're overexposed and your window, your time frame is short, because then you might have to unwind the position in a moment that's not good. I think that's a, you know, the key part is, you know, keeping that, you know, as Jean-Marie said, the math, but picking, you know, talking about the education, there's one step before, which is making people more comfortable with what they don't know about crypto, and coming from a bit of a blank slate, tabula rasa, a little bit, to understand the asset class, because most of the information people have comes from the newspapers. And, you know, if you want to invest in Amazon or AI, you're not getting your fundamental information from Corriere della Sera. You're looking for a proper source of information. But you do get your Bitcoin crypto information from your local main newspaper. And that's not the way to approach it. There's, you know, tons of good information out there on crypto as a technology and crypto as an investment. And people should, I think, embark a little bit more in that journey.
Well, Bruno, you mentioned the cycle, and having heard tons of arguments because the cycle is just starting, but don't you think that we might be at the peak of, in a short-term cycle, given the fact that everyone is risk-on and everyone is so euphoric about nothing can go wrong?
Of course, that's always dangerous when people have that feeling. When you look at the fear and greed index, which is something that's useful in crypto, it's not close to the peak at all. I think the excitement is warranted, given especially what's happening in the US So you should look at it a bit as a Trump trade, considering the 4 years of Trump and what might come from that, and especially how the other countries react on top of it. And the fundamentals are there. When we saw the 13Fs come out last week, and you're seeing, Mubadala. So you have, sovereigns. The things that we've been talking for years and years, that at some point you have sovereigns and pension funds. This is all out there. This is happening already, right? So, and we always like to point to these things. Sometimes you're talking to a bank manager and say, this is worthless, there's no value, and say, there's some people that disagree, a lot smarter than us, Ray Dalio, Paul Tudor Jones, Stanley Druckenmiller, the real legends have been saying the same thing for years, and now you have the sovereigns, you have the pension funds, so there is merit to
Jean-Marie?
Yeah, I think, in some way you need to be a bit careful. We have like 14 months of data on Bitcoin ETF for inflows and outflows. February is the first month, or the third month, I think, in data point, which have a negative outflow, effectively. It's like 400 million in the US right now. It is small compared to the inflow we got, so it's a very kind of negligible data point, but it just shows you, to some degree, there's a little bit of wait and see, or people are just thinking a little bit. However, what we tend to see as well on the same side is like we have a sentiment-driven market. Crypto is an extremely exponential sentiment-driven market. And that the retail is much more, I would say, impacted by sentiment than the institution. And I think that's the first time in history where we get the retail being a bit more cooling off, was the institution are getting more and more excited. So we have almost like a flip in narrative. Institution has been absent of this market for a long, long time. Traditionally, institutions come first. It was the retail market, yeah. And the retail eats the crumbs. In this case, the retail was there first, and now institutions are playing catch-up. So it's a very interesting kind of dichotomy and reverse pyramid of the way it is structured. And as such, we are in this kind of unique situation.
Teddy Fusaro?
Yeah, I just had to add to that point. So our primary focus in distribution at Bitwise is in speaking with financial professionals and institutions and providing them education, and then ultimately exchange-traded products and other products to invest in Bitcoin and crypto. But because of the nature of the ETF and ETP wrapper, of course, they're openly accessible to retail investors, and so we hear from a lot of retail investors. And the point that I just wanted to follow on that JM made is that there's an interesting dichotomy between what we hear from and see from retail right now, which is a little uncertain, and sentiment is actually a little bit bearish from retail investors. And in the financial advisor and professional investor community is the opposite. And they're very excited. They're often working on making their first allocation or first investment or getting above a really minimum threshold right now. And we've never seen that dynamic before. That's new.
Do you agree?
Just going back 1 second on your financial advisor point before, because we mentioned education, we mentioned how to get them to market. A very interesting data point for financial advisor we saw, because both Bitwise and CoinShares conduct a lot of survey in the market to understand what is happening in the market and how people consume financial products. And what we discover is the financial advisor community, especially in the US, so I'm not going to talk about Italy specifically, but in the US, there's a lot of positivity, but at the same time, there's two stuff which are striking out. Is one, they are worried what their other peer are going to think about them for allocating to crypto. So the peer review is still a very big element of the financial advisor decision-making process. The second element, which is much more to us collectively to improve, is like the financial advisor don't trust us. They don't trust crypto-native people to be a good source of information because they believe we are too biased towards our thesis. So what it tells us is like the industry has to professionalize even more, have to become much more institutionalized in the way it is run, so as these people, which are our clients at the end of the day, put a bit more trust into the information they receive from us as being unbiased and not being just, all in and to the moon.
Yeah, I totally agree with both of you. And to echo Jean-Marie's sentiment, we all knew this was going to happen. Well, we started the firms because of this, because large players weren't willing to touch crypto, or and we saw that there was a market that was important, and we knew we would see the BlackRocks and Fidelities of the world coming. The thing is that specialization counts, and knowing the market deeply and knowing the market for your accounts, and you'll always have an off-the-shelf option to allocate into a product, but actual coverage, relationships, and being that partner for the long term, that will come, I think, from shops like Bitwise, like CoinShares, like Hashtags that have been in the sector and that know what's, we've been right in the end. We've been right for several years, so we tend to have a very good feeling of the market. And I think investment advisors are slowly catching up to that.
And based on your feeling of the market, and from Latin America to US and Europe, and Teddy Fusaro was mentioning the fact that today, well, the sentiment of retail investors is more prudent than the one of. Do you agree? Do you see this in different markets?
Yeah, this cycle had a little bit of a different dynamic in which you had Bitcoin going up, incredibly last year, and then of course you had some assets like XRP and Solana also doing well in some points, but a lot of the action on price was on the meme coins, which is we don't need to get into that, but a lot of people that were holding other assets, other good altcoins in the middle haven't seen the performance that they expected, and they've been sitting on those piles for a long time. So there's disappointment, and it's because I think this time around, especially because of the ETFs, the dynamic is very different. So there's this, as we said, the mismatch between the pure retail, more old school type of crypto investor with the new entrant. So it's a split between the early adopters and the early majority that we're seeing being built up, but the fundamentals are there. So,
Teddy Fusaro?
Yeah, in terms of institutional sentiment, I do wonder a little bit if it's because professionals are paying more attention to what is happening in Washington, D.C. And I think it's actually hard to overestimate how dramatic the change is that we're witnessing. Mm-hmm. It was incredibly difficult. We had Paolo on the video earlier who talked about this. It was incredibly challenging, nearly impossible to operate a crypto business in the United States for the last 4 years. If you're a venture investor and you have a portfolio of crypto-related, blockchain-related companies, there's probably a good chance that over 80% of those companies got a subpoena from the US government because they enforced every possible interpretation of the securities laws in basically the most aggressive way that you could imagine. And the tightening effect that had on innovation and on trust with the public and on the ability of companies to innovate and on the ability of investors to allocate. Financial advisors in the surveys that Jan was talking about, they always said that regulatory clarity was the number one thing holding them back from investing. You contrast that to what we have now. Brian Quintens, who's going to be the new chairman of the Commodities Futures Trading Commission, Paul Atkins, who's going to be the new chairman of the Securities and Exchange Commission, David Sachs, who's the new crypto czar that was appointed by the president. These are people who have been paying attention to and working in crypto for 5 to 8 years. It's a dramatic reversal. It is just not, it's hard to overestimate how much of a change that is.
Yeah, also to me, this is absolutely, it's enough to read the executive order of Donald Trump of January the 23rd. For a European, that's kind of disrupting kind of reading. What do you make of that, and how do you see the evolution of the situation here in Europe? Because I have to tell you, we are the Italian CNBC, Class CNBC, and we interview CEOs and regulators day in, day out. On Monday, we're going to have the head of Consob, the Italian market watchdog regulator, and the new responsible for fintech and digital asset from the Italian central bank, which comes from the Federal Reserve in the US, by the way. So they just said recently, in just a couple of weeks, that they have to prevent digital assets to put more risks to Italian investors. And I had an interview with the CEO of Intesa Sanpaolo, the Italian largest bank, and they're testing the market. But he said, for me personally, and for me as the head of the bank, this is nothing that I'm recommending to our clients. They do have more than 20 million clients here in Italy. So how do you read this? On one hand, the US is pushing so fast. On the other, here in Europe, and they're working here in Italy, there's this pressure on.
Well, the US are pushing so fast, but they've been not pushing for a long time, so they are playing catch up. So, but the difference is Europe is, as you mentioned, maybe 2 regulators and 1 president. Europe is 17, 18, depending how you count president and parliaments and regulators, who, despite having an ESMA framework, are still very, very much independent. Including the UK into it, so in a post-Brexit world, FCA and Consob are the last kind of resisting power in the regulatory world in Europe to oppose any kind of listed product on the exchange. The FCA just opened up through UKLA for the LSE to list products last year, and Consob is still resisting Borsa Italiana to offer the very same regulated products that German, French, other European citizens can access through the local market in Italy. So there is definitely a resistance from the Italian market in general. There is an Italian demand. You know, we saw Giorgio from, sorry, forgot the name, from Azimut this morning. We saw Nicola from Young Platform. All these people are showing you that there is a real tangible demand through crypto, through the institutional eyes, but also through the retail eyes. Binance is a very big presence in Italy as well, so there's definitely a demand and an educated demand in the Italian market. And at the moment, the regulator is blocking it, but it's dangerous. Why is it dangerous? Because it's pushing clients offshore. It's pushing clients into other jurisdictions which are not under the Consob regulation.
That's a critical point,
and
because also, Bruno, you know, financial markets are global by definition. Do you expect to be sooner or later kind of a convergence in the approach of regulators and supervision on this kind of stuff, or they would remain so far away?
You know, I think regulators shouldn't play ostrich and you know, hiding their heads in the sand, pretending things are not happening. Italian investors have access to these products, even to the ETPs. They can trade in Deutsche Börse. There are different ways. And at the guise of protecting investors, well, they've been protecting investors from Bitcoin since 2017, since Bitcoin was, you know, at 2,000, 3,000. So they lost a 30x. I think we're beyond that point. Regulators should catch up. And you know, if they don't do, their neighbor will, and the clients will, nature will find its way, using a Jurassic Park quote. People find a way to invest in what they want, and it's a reality in crypto.
Absolutely. Now, gentlemen, we're done with time, but just a minute each for your takeaway to the Italian audience here today at the Quant.
Yeah. Well, first of all, Damiano, Daniela, thank you for having me and for having us. It's been great to be here today. The thing I'd say, just to follow on the end of the conversation that we were having, is as it relates to regulatory developments, as a business operator, I am, and we at Bitwise are, we're very relaxed about how regulations are developing. Do I think that global regulators have gone too slow? Yes. Do I think they've done a good job? No. Do I think they should have sensible frameworks? Yes. Do I think we urgently need them? Yes. But the reason I say I'm very relaxed about it is because I think this is going to happen. Like the Bitcoin, crypto, public blockchains, digital assets is a major part of the future of the financial infrastructure. And it's going to drag the regulators into the future. So ultimately, they will have no choice. So it's like, it's a matter of, on that time scale, years are going to be short. It's going to get figured out eventually. And so I say, from a business perspective, from an allocation perspective, if you have a long-term time horizon as an investor, it doesn't matter that much because it's going to get figured out. And I think that's I'm very excited about the fact that we're finally making progress in the US. I've been obviously very pleased with the ability for us to do more products in Europe because we have more flexibility to do more exchange-traded products here. But it's going to work out because it's inevitable.
Jean-Marie Mognetti.
Well, so Teddy, being American, he stole my minutes, so there's not much more time. And I don't want people to say Prosecco is getting hot because of CoinShares, so I'm just going to say, zoom out on the chart, make sure that you have a little bit of Bitcoin and a little bit of crypto in your portfolio, and just be patient.
Bruno, Ramos, Sousa.
Yeah, it's still early. There's, the world is going into being fully tokenized, a multi-chain world. Good technology always wins. This is good, sound, important technology, and don't worry about too much about prices because there's still a long way to go. Still a good time to get into the market.
Well, thank you, gentlemen, for this terrific conversation. Thanks again for sharing your experience and your vision.